Well, let's move on to the EMS space then. Kaynes Technology, that's a stock in focus. Remember, it's down more than 40% in 2025 so far. The company, though, has signed deal strategic partnerships with AOI Electronics as well as Mitsui. Now, the deal aims to strengthen its upcoming semiconductor manufacturing operations in India. To discuss this, smart metering business as well, and what's the outlook, we're joined by Mr. Jairam Sampath, the CFO at Kaynes. Hi, Mr. Sampath. Good morning, and thanks a lot for joining in. Just a quick question. Yesterday, I read a couple of sales notes that mentioned that the two partnerships, AOI Electronics as well as Mitsui, Japan, both of them, were announced actually earlier as well, September 2024. So what's new in this announcement?
This is final conclusion of the sign-off with the partnerships. And as you know, AOI finally has deployed resources to collaborate with us in the OSAT space. So they are supposed to give us technology and also training, etc., the area of advanced packaging. This is part of our earlier foray into semiconductors, and where we had secured earlier clients in the what we call the legacy technologies, which is the wire bonding and all that. And then, of course, our main aim at the end of the project is to also have significant presence in the advanced packaging, which adds, of course, the technological leadership, plus also it adds profitability to the entire enterprise. So it's very much part of the earlier plan. AOI is one of the collaborators that we had mentioned in our DPR also to the Indian Semiconductor Mission. And this has been concluded yesterday in terms of sign-off.
Got it.
Otherwise, we've been having a lot of discussions and also a lot of exchanges, etc., in the past. As far as the Mitsui is concerned, Mitsui is one of those conglomerates which spans both. They've got two parts. One is, of course, the entire supply side. They can help us strategically in terms of chemicals and all other raw materials, which is crucial for semiconductors. Plus, they also have an arm to introduce us to other clients within Japan. And so, as a partner, Mitsui will bring in a lot of value in addition to bringing technological raw materials and all that. It'll also give us some good market access within Japan.
Okay. All right. Just to touch upon the OSAT facility, could you tell us what is the current status? Is it going according to plans? Yes. What is the capex you're lined up, as well as the revenue potential? How much of it basically is getting tied up?
Yeah. So as far as capacity tie-up is concerned, already we have 3 large clients. And if we so desire, we can probably tie up the entire capacity, because these are very large clients like Alpha Omega Semiconductor, there's Infineon, there's also the L&T, which has acquired a business of Fujitsu General. So, of course, we would like to be more cautious about our portfolio, and we are also adding some more advanced packaging. So from the point of view of customer traction, I think this is as best as it can get at this point in time. We've completed our what is called the pilot plant, and it has shipped out the first set of semiconductor assembled in India, and it is under evaluation. We should hear from the customer anytime for approvals. And then, of course, we'll take up the other 2 customers' clients too, wherein we have got specific RFQs for different types of semiconductor assemblies. And maybe by the next fiscal, we probably would tie up at least 25-30% of the total, let's say, capacity for this in terms of revenues for the entire semiconductor project as it stands today.
Mr. Sampath, there's been just moving on to the smart metering business, because there has been a lot of scrutiny regarding the disclosure inconsistency, governance, working capital, stress, etc. Now, you have guided to bring down the contribution of the smart meter business revenue. I believe it was about 30% to your overall revenues in H1.
Yeah. So we have not said we will bring down the contribution. It's just that it will be a run rate business, which will hover between 800 to 1,000 crores a year. And as the other segments grow up, the relative composition of smart metering business will come down in the overall, let's say, revenue profile. Okay. This year, about 4,000 plus crores of revenues are expected. So smart meter is going to remain sub 1,000. So it will come down to about 25% for the year. The way to look at our business is it's an order-based business. And so as we disclosed last September, we had an order book of about 8,100 crores. And a smaller portion of that is smart meters, approximately about 1,300 odd crores is smart meters. Remaining are businesses which are already there in the 6 verticals that we serve. So the reality is that in every year, a different business becomes a little larger than when we onboard the new clients, etc. It becomes a little larger than its eventual size. And then when other businesses come in, then it kind of settles into a proper composition.
Mr. Sampath, of course, you and the rest of the management team did go to great lengths in that whole episode to explain. I think detailed investor calls were also held where you clarified some of these points. My question is basically, I mean, the stock is down 50% from the peak. Right now, are you thinking of any other ways of, rewarding shareholders or maybe shoring up a little bit of confidence? I don't know, a special dividend of any sort. I'm not sure if promoters are thinking of maybe buying a bit of stake back from the market. Anything on the cards?
Yeah, of course, in the coming year, of course, I still need the board approval, recommendation, etc. But this is not outside the consideration set. Basically, maybe the next coming board meeting at the end of the year, we may recommend going down the path of starting a small amount of dividends. And I think confidence building measure, the ultimate confidence building measure would be to perform as per expectations and promises, which is what we are preparing to do. And we are quite clear that all the strategic initiatives and all the tactical moves that we have taken is bearing fruit, and it's pretty much on schedule. So sometimes it does happen that markets get spooked because of various reasons. The trigger is something else, and something else takes the momentum.
Yeah.
But from our perspective, I think we are well poised to kind of deliver on the numbers that we had promised. And also the strategic actions are in place, because we're not only talking about this year, we are talking about FY28, $1 billion, and then thereafter quickly reaching to a 2 billion number.
Right.
So all of those actions are being taken now. Yes, there are some small
Mr. Sampath?
quarterly troubles that happen sometimes on working capital, sometimes on some cash flows.
Yeah, right. So Mr. Sampath, on the working capital, which is where the issue was, which is where Kotak raised that issue, can you tell us, as of today, when we're speaking, what are your net working capital days looking like? What is the plan of bringing it down? Just give us a roadmap.
Sure. So the analyst actually did not talk about these things. He talked about a lot of factual, let's say, quote unquote inconsistencies, which will later on prove that there was only one little error. Be as it may, we are looking at about 85 days and less by the end of the year in terms of net working capital. And we also are committed to show operating cash flows, significant operating cash flows, positive cash flows by the end of the year.
Okay.
And
Mr.
I think towards that, we are making good progress. So you will see probably when we meet again sometime during April or early May, these numbers would have been achieved.
Okay, positive cash flow by the end of the year. Just a quick word. You said FY26 revenues of 4,000 crore?
Yeah, plus.
4,000
There
crore.
are lots of moving parts here. We had earlier estimated some small revenues for semiconductor also. Now we are thinking that we'll get approvals for semiconductors so that next year's entire revenues are secured. And since our business completely depends on how well we perform, and there are no PLI and those kinds of things, except for the PC board, there is a PLI available, which we'll probably deal with it next year. Otherwise, our EMS and OSAT businesses are dependent on completely firing up the entire capacity and then, let's say, delivering to all the customer requirements.
Yeah, got that. Thank you for explaining. The reason we asked is because after Q2, you said for this year you will deliver a 60% revenue growth. which would have put your top line at 4,500 crore. And now you're saying it will be 4,000 crore plus.
4,000 is the EMS portion of the business. There are overseas subsidiaries and so on and so forth.
So 4,500 crore stays as a guidance.
Yeah. So we've been saying it'll be around 4,2 kind of number. Let's see where it gets to.
Sure. All right. Thank you. Out of time. Thank you, Mr. Sampath, for joining in.